Hey everybody, CEO tip of today is how you can create your investing system. Now, we have talked a lot about revenue systems. This is where the money comes in, but you need also to keep your money. And in times of inflation and depreciation of money, it's important that you stay at least with the purchasing power. So at least you should do around 8 to 15% with your money at all times, and that's the minimum. But how do you do it? It's not that easy anymore. Many concepts that were working really well don't work anymore. It's not that easy to repeat success from the past, so you will have to create, depending on your context and your goals, your investment system. The good news is there is a process how you create your investment system. Step one is that you pick your allocation baskets. So you think of your overall net worth. How much percentage do you want in each category? Roughly, how much cash, how much real estate, how much equities, and how much something else. Can be digital assets, can be gold, whatever floats your boat. Let's have an example. I think a good general, for most people, a good allocation would be 25% cash, 25% equities, 25% real estate, and 25% former gold, if you live in the now, digital gold, which is Bitcoin. So that can be, for example, 4 baskets out of 25%. Let's say you define something like that. Enter your percentages. Now you have your allocation. Step 2. Inside of those areas, you want to pick the winners, which is not easy. And because it's risky, because you will not pick only winners, and because you will pick some winners, but at the wrong time, you will pick them at the wrong price. We have to do some risk management. How do you do risk management? I learned from Ray Dalio, the CEO of Bridgewater Associates, that you can still keep the upside potential, but reduce the downside potential if you have 8 to 15 uncorrelated assets inside of those baskets. So for example, in the stocks basket, let's say you define 25% stocks. In that basket, you can pick 8 uncorrelated assets. For example, gold 10%, Google 10%, which is tech. Now that you have tech, you can pick energy, for example, Peabody Resources or Canadian Natural Resources. And then you pick a commodity, for example, copper. You pick a rare metal, for example, silver. And you get the logic. So you have different uncorrelated assets inside of that. That's how you risk manage. You have picked your allocations. That was step 2. Step 3 is when to buy. Because you can buy a great stock, like Google or Amazon, but you can buy it at the wrong point in time. When it's at its peak, then you will have a problem. And it can happen. So the last step is technical analysis. And I've created a whole course of 9 modules on how to do that, fundamental analysis and technical analysis. So it's bigger than this video. But basically, you look at the chart. I use TradingView. I'm not paid. It's just helpful. You can use the free version and have 3 indicators. And if you pay, you can have more indicators. I use 8 indicators. And when they all fire at once, I have a buy signal. So I enter that position. If they all fire at once, give me a sell signal, I will exit parts of that position. I will take some profits, and this will become cash again, the 25% cash position. Because at some point, markets is always in cycles. You have bull markets and you have bear markets. It's like the water. I'm looking at the see right now, it's always wave formation, end of the wave formation, end of the wave. That's exactly how the markets operate. So when the markets are on top, you never get the total top, but you gradually take some profits on the way up. And this will be your cash position, 25%. When markets go down, you will deploy, you will buy, and then you have less cash. So you go up again, you take profits, you have more cash. Markets go down, everybody goes, oh, recession. And you go, all right, cool. What can I buy cheaply? And buy your favorite things. My favorite stock is Google. My favorite digital asset is Bitcoin. When these things go down, I buy. I'm just calm and happy and buy, right? So I accumulate gradually in those phases of fear. And when there is greed, I sell a little bit of that. That's basically, this is how you create your investment system. Now, the only thing that you have to really be careful with is how much time do you want to spend on this? You can hand it over to wealth managers. I do not recommend that from personal experience and from the experience of dozens of people every week that I talk to. They don't really care about you being really over inflation. They just do their job. But if it's yours, you care. And so you will be a little bit more precise, I guess. So you can do it on your own. It's just these couple steps that you've heard. The only thing that you have to define is how much time do you want to put per week, per month into rebalancing, because you have to manage it. You have to rebalance. You have, you will have less cash in bull markets, so you have to take profits. In a bear market, you take profit. In the bull market, you take the profits. You have to deploy them. You have to sell. You have to buy. You have to sell. You have to buy, and check the general risk and the general resilience and the general health of your portfolio. So that's a little bit of work. You have to decide if you want to be very active or just more on the passive side of things, just checking once a month. And depending on that, you will pick less riskier, less volatile assets inside of your baskets. That's it. And if you want to go more aggressive, you have to take care of 1 hour per day of your portfolio, and the middle way, an hour per week. That's something to consider. So the invitation of this week is build your investing system. If you need help, we have a full course on that, but go and build your investing system. Keep rolling.
What if your business would run well even when you are on vacation? Discover how 1,600 business owners have regained their freedom using the Strategy Sprints blueprints. How they enjoy living their dream and watching their business scale. Get the exact checklists they use to go from stressed to fulfilled using the Strategy Sprints method. Order your copy of Strategy Sprints 12 Ways to Accelerate Growth for an Agile Business on Amazon today. And if you love it, leave us a review. For more information, head over to strategysprints.com.